the GST registration approval or the GST registration number within 3 working days, and it is on input tax credit. But you do not, the goods has not been yet received, so you're not supposed to get the credit. So such vendors have shown that particular tax invoice in their GSTR1 returns, which is now for table 6E1, where the ITCs of the preceding financial year, all business owners, there is an option of composition scheme available. Hello friends, welcome to another discussion presenting 5 checkpoints on GST on traders, 5 important vital checks that every trader, every small trader or businessman, a wholesaler, a trader or an e-commerce operator must ensure for smooth conduct of their businesses. So today we are going to discuss on 5 important GST checkpoints for traders. So we are specifically curating these small videos for each important sectors. We are now entering the period of GST filing of GSTR 9C, which is due in this part of the year. So and the GSTR 9C will be filed for the financial year 2024-25. So just let us start with each of the 5 checkpoints, which are really very important for traders specifically. So let us first discuss our first point is on registration. So for the registration purpose, for GST registration, the threshold limits are very important. So what is the threshold limit? As of now, the threshold limit stands for goods is 40 lakhs and for services, it is 20 lakhs. If you're having a taxable supply of more than 40 lakhs for goods, then you have to take a mandatory GST registration. And for taxable supply of services of rupees 20 lakhs and above, you need to have a GST registration. So this is the first important step, and GST registration is the first important parameter where you are you will be charging GST on behalf of the government at the applicable rates. Now, with the introduction of GSTR 2.0, after the rate reductions and the rate rationalizations and the rationalizations of the GST rate slabs, so it is very important to identify and know what will be your HSN and SSC code. So for goods, you have to identify the correct HSNs which will be applicable. What is an HSN? HSN is nothing but a code, that is harmonized system of nomenclature, which is a particular code which is given and it is used all over the world. Now the GST Act also uses it. The tariff rates are determined based on the HSNs. So we have to correctly identify the HSN. It's an 8-digit number. It starts with 4-digit basic and then it adds on the multiple 2 digits for a specific rate on a specific code for a specific service or a good. So HSN is relating to the goods and SAC, service accounting code, is relating to the services. So the first important step after registration is to identify the correct HSN and SSC. So this will create a problem if you do not report your correct HSN and SSC during the time of registration as well as when you are doing your business, because that will determine the correct rate of tax. Now since post 22nd September, the rates have rationalized. It's important to do a thorough review of the new rates that will be applicable for goods and services. Now, as per the latest circulars or the latest rules that has been notified by the Government of India, the registration process has been overhauled once again. Now, it has been overhauled in a very positive step. That is, now you can get a GST registration approval or a GST registration number within 3 working days. Now, this is for those categories. Specifically, these are for 2 important categories. One, the system will identify that this particular applicant is a low-risk candidate. Now, what is a low-risk applicant? The low-risk applicant is a system-generated assessment of the applicant that if the applicant has got multiple GST registrations earlier where there has been some non-compliance, or if the applicant has a GST registration that has been cancelled suo motu by the department for not filing of returns or any non-compliance. So those categories will not be considered as low risk. So we have to understand it's a clean record, it's a clean applicant doing a first time registration. Everything is all right. So that the system will generate a low risk categorization for it. And the first important step for the 3 days approval has been met. Now the second important thing, you have to make a declaration. The declaration is that your taxable output supply or the tax that will be paid monthly will not exceed 2.5 lakhs. So if your total tax liability is coming within 2.5 lakhs, you again fall into this category of the 3-day approval. So if you are satisfying these two conditions, then applicant on the date of application for GST registration, within 3 days, registration process will be approved. Barring these 3 days, for normal cases also, the GST registration process has been smoothened, and a lot of clarifications and lot of SOPs has been introduced by the GST department, through which they are doing this faster GST registrations. The GST registrations have increased tremendously over the past few months, and now it is increasing yet again. So the tax base all over the country is increasing. This is one of the main reasons why the GST rate has come down, or the rate rationalizations has come down, because the government has been able to penetrate to more and more of the taxable income. More and more people are now coming within the tax net. So that is why the rate rationalizations are happening. So this was our first important point on registration for the traders. Now let us come to the second important point. Now this is a very vital point, and it is on input tax credit for traders, wholesalers, e-commerce operators, and rather for any applicant, for any sector. The input tax credit is something, the credit the government is giving to you on your tax liability, on your assessed tax liability, and you are paying the differential amount to the government. So for ITC, it is very important to have your documents, your accounting system ready. So what are the preconditions for claiming of ITC? First and foremost, you need to have a tax invoice. Let me just go through the few important points once again in a roll. One is it's a tax invoice, a proper tax invoice as per the rules governed by the CGST Act, where the proper line items or proper structure of the invoice has been given, where you have to maintain such structure and prepare a tax invoice. So you need to have first important document is you need to have a tax invoice. Second, the goods must be received or the services must be completed or procured. So in order to get the credit, if there is an ITC document, input tax credit document, tax invoice, but the goods has not been yet received, so you're not supposed to get the credit. So we have to delay the credit, or you can take the credit once the goods have reached your godown, factory, whatever. So goods must be received. So you need to have a GRN or a goods received document that yes, the goods has been received. This is the second important point. Third important point, now since you are going to get the ITC from registered vendors only, so such vendors have shown that particular tax invoice in their GSTR 1 returns, which is now coming to your GSTR 2B. So proper reconciliation of your 2B, whether such tax invoice is showing and reflecting in your 2B, then only you can claim. Third, the vendor has paid the tax. Since now the sequential model has started, that obviously they have filed their GSTR 1 return, and that is why it is coming down to your 2B. So it's very obvious that they have filed their 3B, because without filing the earlier 3Bs, you cannot file GSTR 1 of the next period. So now it is very much confirmed that the particular person or the vendors have paid their taxes. But still, this is a very important point, because in your GSTR 2A, you can see whether the vendor has paid their taxes or not. So we can cross-verify that also, whether the vendor from whom you have procured the goods or services have complied with GST. The last important point is, obviously, you as a supplier have filed all the returns and you have been updating in the returns. Now, another important point here, when you are procuring a goods or a service, from the date of invoice, you have to make the payment within 180 days. Now, if you do not make the payment within 180 days to the vendor, the ITC that you have claimed gets reversed. So please make sure that you make the payment of goods or services within 180 days, or in case you're not paying, then obviously that reversal needs to be done of the credit that you have actually taken. Yes, once you are paying the vendor after 180 days also, then you can reclaim such credit. That option is there in 3B to show properly. So I'm not getting into those details, but this is a very important point. So this is what the ITC looks like. The ITC part looks like for this particular traders, the wholesalers, because since the traders or the wholesalers have got very small margins in their profit and loss account or in their business. So it is important to have the purchases very proper, sanitized and cleared with clear information. So that is the second point of our discussion today, that is ITC. Now moving on to our next point, our third important point is the invoicing or the documentation. Maintenance of invoice, proper invoices, debit notes, credit notes, delivery challans, e-way bill, This is a very vital point for GST, for all the dealers, not only for traders, but coming to the in respect of dealers or who are traders, who are doing trading business, wholesalers or e-commerce operators. Having a proper invoice management system, invoicing system is of vital importance, because that will give you the credits for your ITCs and have a proper documentation in case you are facing any future audit from the department. You have a proper safeguard, not only in your software, but also in your proper document maintenance. So that should be as per the rules. So there are the various rules under which each and every documentation, how it needs to be prepared, one of the points needs to be given is provided by the law. So we need to follow it very carefully. For e-way bill, for delivery challans, for HSN code, SSC, everything must be properly recorded with the correct code, correct rate, correct address, correct GSTN, correct description of address. E-way bill must be a valid e-way bill. Should be checks must be made that e-way bills must contain the proper details of the addresses, the transporter details, everything. So that will give you a support system for the ITC that you are claiming. That is a back-end support for the ITC that you will be claiming. So invoicing must be done in a proper way. And as you all know that invoice management system by the department is live from this current month, which is we are now in the month of November. So we will be filing the returns for October. So through IMS only you can identify the invoices on which your credit needs to be availed or utilized. If there is some credit which is under confusion or under some kind of suspense, some kind of clarification from the vendor, so you need to report it in your invoice management system and defer the credit to the next month. Once such clarification is there, once such clarification is over, then only you can take the credit. So this invoice mapping has begun, which was actually initially planned during the implementation of GST. But now the government is actually, finally, it has come down to the system where the mode of acceptance, rejection, deferment of invoices is coming down to the picture. So please be very careful of the IMS and claim your credit through proper reconciliation through the IMS, through the books, and as well as your earlier returns. So this was related to the invoice. Now coming into the fourth important point is the GST returns. As we all know that we are filing GST returns monthly, and in some cases we are also filing through quarterly system of the GSTN. Now in the monthly returns, obviously we'll be filing the GSTR1 first, and then we go for GSTR3B, and this process will continue for the 12 months. So we know that there is no point of revision or revision of any return in the earlier period. So all the reconciliation, rectification must be done prospectively in the future returns only. So now return filing should be error-free. I won't say error-free, but it should be made error-free to the maximum extent possible. So the due date for GSTR 9(9)C for financial year 24-25 is 31st December 2025. So we have got only 2 months, nearly 2 months left before completion of this reconciliation process and filing of your 9(9)C. Major changes have been coming in 9(9)C for the financial year 24-25. The GSTN has issued notifications with regard to this. Before filing of GSTR 9(9)C, it is important to know who are going to file GSTR, who are going to file the GSTR 9 or 9C. Threshold limit for GSTR 9 for dealers who have aggregate annual turnover of more than 2 crores. So they need to compulsorily file GSTR 9, and anything less than 2 crore, can we file GSTR 9? Yes, we can still file GSTR 9. So it is not mandatory, it's optional, but you can still file GSTR 9. 9C, more than 5 crore annual aggregate turnover, you have to compulsorily file 9C, that is the reconciliation statement. And if it is less than 9K, it is not required. 5 crore, it is not required. Now, just a small tip here is, even though your turnover is less than 2 crore, if you feel that in your GST returns for the last financial year, there is some corrections that has been made, there are some ITCs which has been deferred or claimed, which is some kind of reconciliation was required, I will suggest please file your GSTR 9 and make the corrections then and there. Though it is optional, but I still find this is another, it's a final, this is a final chance of correcting your data, correcting your returns for the preceding financial or the last financial year, the year that is 24-25, And this will also lead to lesser litigation in the future if the GST department needs some query. If the GST department finds some kind of unreconciled data, they can do it through their GSTR 9. So even if you're having turnover of less than 2 crore, if you have some reconciliation thing, then you can file your GSTR 9 and then you can be a little bit free of any kind of tension that a GST notice may come up. So that is where the GSTR 9(9)C threshold comes. Now, what are the changes that has happened? Change that has been coming in is the introduction of a table 6E1, where the ITCs of the preceding financial year needs to be disclosed separately, which is claimed in the particular financial year of your filing. That is, for example, you are filing your GSTR 9 for 24-25. If there has been some ITCs of 23-24, which you have claimed in 24-25, you can show this data through table number 6A1. The next table that has come automatically, obviously 6A2, which is the net ITC that you have claimed for the current financial year. So this will not be shown, since this is the ITC of the 24-25 specifically, which is coming down in table 6A2. Another important change that has come in 9(9)C, which we feel very vital for information, and that is the mandatory disclosures of ITC reversals. We all know that there are various criteria for ITC which needs to be reversed. Some are blocked credit, that is, even though it is for the purpose of business, still you won't be able to utilize such credit. That comes under section 17(5). There are some particular rules, rule 42, 43, 37, 37A, where mandatory ITC reversals needs to be done. This has to be reported specifically under each particular rule in this particular GSTR 9(9)C. Previously, this was not required, but now it is now made mandatory, and these disclosures needs to be given separately under each of these rules. Another important thing in GSTR 9 is the disclosure of the late fees. This was not previously done but required. Now it is importantly required. That is, what is the late fee payable and what is the late fee paid. In a lot of GST notices earlier for the earlier financial years, we have seen that the department is sending notices that there was some interest due, some late fee which we have not paid. This disclosure was not required in GSTR 9, but now GSTR 9 for financial year 24-25 has specifically inserted this column where where the late fee payable and the late fee paid must be disclosed separately. So this was for our a gist of important changes that has come to GSTR 9(9)C. Last date is 31st December. So it is important to do your reconciliation, do your homework before filing the correct GSTR 9(9)C. This will reduce litigation to a lot of extent, which I feel. Coming into the fifth point is for traders, dealers, obviously for small business owners, there is an option of composition scheme available. And we all know that turnover less than 1.5 crore for goods, you can avail this composition scheme. And for services, it is 75 lakhs. So you can avail this composition scheme, and the rate is 1% of your total turnover, provided that obviously all your input tax credit, all your purchases made, the ITCs therein will not be allowed as a credit anymore. So that will go into your cost. You have to pay net 1% of your declared turnover through the composition schemes. Important to note, when you're charging 1% in your invoice, you cannot claim or you cannot charge GST anymore. So you have to specifically mention that you are a composition dealer. You have to just provide a normal invoice. It is not a tax invoice. It is a normal invoice where there is no component of GST involved there. We have discussed 5 important points on GST on traders, wholesalers. So if you're a trader, if you're a wholesaler, if you're an e-commerce operator, GST is non-negotiable for you. You have to comply. You have to maintain the documents. And for small dealers, I will say that being compliant in GST is not only mandatory and important for your entire business, but it is also an important advertising tool, because I'll say if you are compliant with GST, if your GST returns have been properly filed, you're maintaining proper documents, then there are various schemes of the government that you can avail as a proper GST registered vendor. So various nationalized banks are now providing finance to small dealers who are just filing their returns. They don't go into their documentation and everything. They just pay a certain percentage of your entire GST turnover as a working capital loan or a cash credit loan, where fewer documentation is required and fewer collateral security and all. You can, and fewer collateral security required. You can avail the CGTMSA scheme of Government of India and avail a without collateral credit for your business, just based on your returns, based on the returns filed by you, proper returns filed by you. Banks will sanction you a working capital limit that you can avail. There are other benefits of complying with GST, and it makes you a compliant vendor, where you can be able to promote your business. You can do business with bigger business houses, where your GST returns makes a mark and makes you a proper registered vendor thereof. And we have discussed 5 points. There are other points, but these are the 5 points which are very vital.